Hello, you made it back. Great. Thank you so much for joining me today for debits and credits. So what are debits and credits? They are simply accounting terms that we use to describe the plus and the minus sign. That's it, just new terms for you to remember. So to help you out, we have a memory key. Credit is red and red is dead. All right, so let's talk about some rules. When you're looking at the income statement and the balance sheet, every number that you see on here is normally posted as a positive number. When you see a negative number on a balance sheet or income statement, that we're going to cover later. Sometimes it's okay, other times it's not. Our normal balance sheet and income statement shows positive numbers for appearance purposes only. We as bookkeepers know there's more behind the scenes. In order to create transactions, which we're going to cover in video 3, we have rules to go by. So those rules are, since all of our assets must equal our total liabilities and equity as we discussed in video 1, everything in the asset section, the normal balance should be a debit balance. Everything in the liability and equity section, the normal balance should be a credit. So when you look at your current net income, we know it flows through from the income statement. It needs to be a credit normally in this section, so our net income should be a credit. And that means on the income statement, our rules here are everything in the income section should be a credit normally. Everything in the expense section should normally be a debit. All right, that way the difference, hopefully the income will be greater than the expenses and we will end up with a credit balance to flow through. Now sometimes this does have a negative. That means there's a loss. That does happen from time to time, and we'll cover that later. All right, so now let's move on. I want to show you something to help you out a little bit working with debits and credits. This line right here separates our assets from our liabilities and equity, and today it's going to represent water. I want you to take a look at the number line this way, with 0 being on the water line. Everything above the water line is in the asset section, and they're debit balances or positive numbers. So that's 1, 2, just simple math. When you are working up here and you want to increase a number, we add to it. So 0 plus 12 equals 12. And if you want to reduce that number, you simply subtract from it. So 12 minus 12 equals 0. Well, when you're working down here in the liability and equity section, it's going to work exactly the opposite. So these numbers are negative numbers. And if we want to increase a number in this section, we would subtract. So 0 minus 12 equals negative 12. And if we want to reduce that number back down to 0, we would simply do the opposite that we do up here, and we would add 12. And that brings it back down to 0. Okay? That'll help you later as we learn transactions. Now there's one other thing I want to go over. Sometimes the bank posting a deposit on your bank statement and it shows as a credit, that has caused so much confusion. That is the only reason really that debits and credits seem to be a problem. So let's clear that up. Now that you know how to read balance sheets, let's take a look at the bank's balance sheet using Jack as his $10,000 deposit as the example. So he takes the money to the bank, they put it in their vault, they have to record this on their balance sheet. They have to account for that $10,000. So they post a debit to the cash, in the asset section to the cash account, and the other side of their entry is a liability because they owe that money back to Jack. It's not theirs to keep. So they post a credit to the customer deposits, Jack's furniture account, for $10,000. So I hope that clears some things up for you. Our next video is posting transactions, so you'll see how all of this works and how we get our numbers onto these statements. And I'm so glad that you're here with me, and I look forward to seeing you next time.